Hi everybody, this is Paul Cooper with Totes and Notes. It's currently July 11th, 7-Eleven, and I'm here with this week's Market Meltdown. First thing we're going to talk about is the U.S.-China trade negotiations and how they've basically collapsed. You know, they've met a couple times, things get better, they don't. Things are just escalating. A lot of it's, on our end has been increasing a lot of stuff. And this article just talks about some of the basic things, but the big thing that I took away from it was this graph here. What's the trade gap that we have with the U.S. And so this here is in hundreds of billions. And so we import currently a little over 500 billion, and we export not quite 200. So, it's a very large gap. There's a reason why we're having issues with our economy with them, and that's why when China is more than happy to sell us and manufacture a bunch of cheap garbage, and we keep buying it. And so we're sending a lot of money overseas to China, and it's not exactly a very healthy economy that we have right now. Are tariffs the way to go about it? I don't know, but it's just something to keep an eye on. All right, for our second article, we're going to talk about commodities, and specifically oil. I talked about it previously, how oil prices were really rising. Everyone was paying a lot more at the pump, and I'm sure you noticed it. And then now, oil's plummeting, and not just oil, commodities in general, especially metals. And I'm not talking precious metals like steel. Dr. Copper is just throwing up over the place. And the issue is you're like, oh, well, these things are cheaper, right? So that's good, so you can build more stuff. Not really. Usually when copper and oil and other main commodities like that are used in production and in construction start to drop, it's because demand's dropping. Because demand is, should be controlling the price somewhat depending on the supply. So if the supply stays the same as far as production goes, then if it's dropping, it's generally going to be due to demand or some type of technological advances come along, which lowers the expenses. So here's the graph for oil. And then the article just further goes on to also talk about agriculture. If you've been watching, I should have talked about this in the previous article. With China, they've raised tariffs on us, so a lot of our farmers are seeing huge losses. I believe it was the price of soybeans has dropped like 16 or 17% in the past week. And so a lot of farmers are already at the point where they're not even going to break even because of that drop. So expect more drops in commodities. So if you're invested in commodities and you can get out, you may want to think about it. Of course, it could be a good buying opportunity here in the future, but it's something to keep an eye on. Commodities are a little bit different than the regular stock market. They're just super volatile, and if you don't want to play the commodities, you can look at the actual commodities themselves and what other companies are they going to affect. If it's agricultural, well, then it's going to be affecting your food companies like Kraft. Metal would be attacking other companies, especially like Caterpillar, things like that. If people aren't using raw materials, they're probably not buying Caterpillar machinery to build stuff. So it's a decent way to look at the market and kind of get a good indicator for the health of the economy and put your fingers on the pulse. All right, for our last article that we're going to cover just on the general economy and the world economy are the all-conquering tech stocks. The market's been up this year, it's been up the past few years, and it's usually due to just a handful of stocks, the ever-popular FANG stocks, Facebook, Apple, Amazon, Netflix, Google, and a few other international tech stocks. And the problem is when you just have a handful of stocks creating all the gains that you're seeing in the stock market and you're basing your economy off of that, it's not very good. Not only is it just a handful of stocks, it's an entire sector. It's only one sector. It's not like, oh, you got one stock in construction, you got one stock in finance, you got one stock in tech, one stock in health. They're all tech-based. And this isn't good because if you're getting all of your, all the value of your market out of one small group and one small sector, then generally that means you don't have a very healthy market. So if you do have some of these stocks, You may want to think, and you're up, you may want to think about liquidating some of it. Again, I'm not a financial advisor, so, this is all my opinion. You have to think about this for yourself. But it's just another market indicator that the market isn't healthy if only a small section of it is inflating the entire market. All right, now we're going to go over to Housing Wire, and we're going to start talking about real estate a little bit. All right, we're back, and we're going to talk about our first real estate article, and this is from Housing Wire, and it's the 5 reasons that millennial home ownership rate is low. And I could give you a lot of guesses. I'm sure you've got a lot of good guesses and reasons, but we'll go ahead and look at theirs. They're saying delayed marriage. So they're thinking the reasoning behind this is people are getting married later, so there's no reason to buy a home. They can rent, stay in apartments and whatever, which kind of makes sense. There's no point buying or paying for a place that's bigger than you need. But I think, honestly, I don't think that's the biggest reason. There's greater racial diversity. I'm not really sure what they mean by that there. So you've got more people of all races buying stuff. I'm not sure why that's decreasing millennial contribution to home ownership. Increased education debt. This would be number 1 on my list. I think the average higher education debt that a student comes out with right now is like $50,000. It's a lot. And it's not like these people are rolling into really nice paying jobs that pay at least $50,000. A lot of these students are going to school, getting jobs for paying high 5 figures to get jobs that are going to pay, maybe 40 if they're lucky starting off. And in the growth rate for that job could be, years from now. And then you get people that go to become a social worker because they hear the call and they want to serve. And to become a social worker, you have to have a master's degree in social work studies. And it costs over 6 figures. So you're getting a 6-figure debt for a job that pays like $32,000 to $35,000 starting off and does not have any real job growth. I mean, at that point, might as well become a teacher because at least they'll have a little bit of job growth and you get summers off. So the education debt is insane, and honestly, that should be number 1. Increased rents. Yeah, rents have been going up. I'm sure everyone's seeing that. Rents go up year after year. The cost of homes goes up year after year. The maintenance, utilities. So in general, things are just expensive, and then you could also just point out that wages really haven't been increasing with inflation. Then delayed childbearing. Again, it's kind of a reason like the delayed marriage. Maybe you're not going to buy a place if you don't need it. But I think there's some more important economic factors. Again, not a bad article, but it wouldn't be my list. Our second real estate article here is the FH Commissioner is planning on easing off on the false claim acts used to bring big banks back to FHA lending. So they're really, really trying to increase FHA lending. We've talked about in previous articles where they're loosening the standards on first-time homeowners, lower rates for down payments. They're easing up on credit scores and things like that. So this kind of the late cycle stuff that we saw last time, and it's coming back. And so now, to get more people or more banks involved in the FHA, they're going to ease up on punishment. So now it's going to be harder to bring punishment and lawsuits and make these FHA lenders that are doing bad things and not following the law, they're going to start getting away with it more. So they're not going to prosecute as much. They're going to dial back on the claims. And so, yeah, all of these big banks are really happy to come back in and start lending at these, subprime garbage. And if they're not going to get punished for, why wouldn't they? I mean, you got Wells Fargo right now for years being investigated for creating false bank accounts, creating accounts for people that have left years ago, people that are dead, and they get a slap on the wrist. So really, there's no incentive for these big banks to follow the law. I mean, if it's going to be a small punitive damage and they can make billions more than what they're ever going to have to pay back in damages, they'd be silly not to. It's just simple math at that point. And then this is probably the most interesting real estate article and one of the more interesting articles of today is Hurricane Maria drives Americans to invest in Puerto Rican homes. So I guess the average price in Puerto Rico since Hurricane Maria has dropped 15%. And it makes sense. There's massive flooding. There's lots of damage. And so people that have money now, kind of like in any distressed area, are starting to swoop in, buy some of this nice real estate at a cheaper price because people always have to have a place to live. And then there's some other cool things going on in Puerto Rico. I mean, one, obviously, you got the great weather minus the crazy storms. You're still part of the U.S. You're close to the U.S. And then there's that awesome tax advantage that you get if you have a business and you live there. I think it's for 6 months or 6 months in the day of the year, then you're considered a permanent resident in Puerto Rico. And if you run a business there, I think you can get your taxes down to something obscene like 4%. I mean, just absolutely amazing. And so if you go live in a tropical paradise and have your business ran from there and save, tons of money on taxes each year, why wouldn't you? And so people are going there, they're buying up. If you're willing to do long-term rentals or distance rentals, then you could do that there, and you're going to be saving a lot of money on that. So, it's prime real estate at a discounted price. People are swooping in. So that's just another good example of trying to find distressed and undervalued assets. And if you have cash, you can go in and start buying that stuff at a discount, and then you're ready for the upswing. Well, that's all we have for this week. I appreciate you taking your time to join me. If you have any questions, comments, or concerns, any topics you'd like to cover, please reach out to me, and I hope you all have a good week. Thank you.